Rocketlab, SoFi, Affirm, Airbnb, Draftkings, Robinhood, Coinbase. Boom. There you have them. Don't click away, though. You're not going to want to miss my detailed analysis of exactly why I think these companies will last the test of time, or at least the next decade. A few of these stocks actually also made it onto my list of 9 stocks that could 100 times in the next decade. If you haven't already watched that one, be sure to queue it up after learning about these IPOs. I'll include a link in the description below. Also, before I get roasted in the comments, I'm sure that all the finance whizzes watching this video will be quick to grill me because lots of these companies technically went public via SPAC, not an IPO, which is contradictory to the title of this video. However, for the sake of this video, I'm going to act like these are both the same thing, and if you don't like it, then please reach out to my lawyer. Also, I want you to keep in mind that 2020 and most of 2021 have been very weird years. There was a once-in-a-lifetime pandemic, riots in the streets, people in Viking helmets stormed the Capitol. I don't know, it was just a lot going on that led to a lot of volatility in the stock market. Despite all of this, remember that stock investing is a marathon, not a sprint. The following companies were chosen because their business model should succeed over the next 5 to 10 years, not 5 to 10 months. The last thing before I share my analysis is that I ask you to please help me tackle the YouTube algorithm by hitting the like button or leaving a comment below. This will help my videos rank higher in searches, but more importantly, helps us work together to outsmart big tech by defeating their algorithm. All done? Thank you. Now, let's see why these companies were worthy of making this list of IPOs to hold through the 2020s. All right, out of all of the companies on this list, this is probably the least well-known. Rocketlab is a company that specializes in launching rockets into space and competes with Elon Musk's SpaceX. In fact, after SpaceX, Rocketlab is probably the second most successful company in terms of the number of successful rockets that they've launched into space. One of their rockets, Electron, is the second most frequently launched U.S. rocket annually that does missions for both the public and the private sector. The entire space industry is undergoing a major change right now. For years, it was relatively stagnant. However, recent interest from billionaires like Jeff Bezos, Elon Musk, and Richard Branson is giving the whole sector a lift. Humans have always been captivated by space, and there are more reasons now to establish interplanetary travel than ever. As the industry continues to grow, there are only a handful of companies that will be able to capitalize, and I believe that Rocketlab is one of those companies. SoFi. The financial industry is another industry that's been experiencing massive changes over the past few years. New companies like Square, Robinhood, and Affirm, spoiler alert, have all been introducing new technologies to consumers that help them spend, save, and invest money more efficiently. Since there were so few options for consumers for so long, lots of these new fintech companies are quickly becoming wildly popular. When it comes to fintech companies, SoFi is a little bit of a jack of all trades. They have products for investing, money management, personal loans, home loans, student loans, refinancing, and more. Regardless of what people's needs are when it comes to their finances, SoFi is pretty much a one-stop shop that can help them reach their financial goals. This is also a company that just went public in 2021, and I think they're still flying below the radar in terms of the attention that they receive from major institutional investors. As the 2020s progress, there's a good chance that SoFi will become more and more popular. The new Los Angeles football stadium is also named SoFi Stadium, which will be great publicity for this young company. Affirm. Affirm is one of the leaders in the incredibly young buy now, pay later industry. If you've never heard of buy now, pay later, look for it as an option the next time that you're checking out of an online store. Essentially, Affirm allows consumers to finance their shopping. For example, if you were buying $300 worth of clothes online, then Affirm would let you pay for it in 3 different payments of $100 over the course of a month, instead of $300 all at once. In this sense, they offer a service that's very similar to a credit card, except that they finance your purchase automatically while you're checking out. As long as you submit your payments on time within a few months, then you don't even need to pay interest on them. However, if you don't mind paying interest, then you can also spread your payments out over a longer period of time. It's no secret that today's society is in love with debt and easy spending. Household debt and credit card debt are both at all-time highs, and this trend is not likely to stop anytime soon. Affirm is in a perfect position to capitalize on this trend by offering consumers an easy way to make everyday purchases more affordable. Affirm is also not quite as predatory as credit card companies because they're very transparent with their fees and how much you will need to pay. Affirm also recently signed a partnership with Amazon, which is a major move. Since Amazon is the world's biggest e-commerce company, this could be absolutely huge for this young company to become one of the biggest buy now, pay later companies in the world. Airbnb. Airbnb probably needs no introduction, so I won't waste your time telling you what they do. The biggest thing that has me excited about Airbnb is that they're in the perfect position to take advantage of a massive cultural shift that's going on right now. During the pandemic, almost everybody was forced to work from home. Since business more or less continued as usual during the period of remote work, many companies and people have started to rethink the traditional 9-to-5 model. For years, employees have felt that there is no real need to be in the office for 8 hours every day. However, working remotely during the pandemic actually proved this to be true. During 2020 and 2021, there were tons of people who chose to take semi-vacations while they were still working. Instead of living and working at home, they traveled to somewhere fun like Florida, California, or Colorado, and spent time both working and vacationing. When they traveled, they'd book with Airbnb. Although Airbnb has a few competitors, I believe that they already have that top-of-mind brand awareness with consumers. For this reason, they'll continue to grow and dominate throughout the 2020s. Draftkings. Online sports betting isn't legal in all 50 states yet, but it will be. Right now, a little under half the country allows sports gambling. However, it's clear that sports gambling is becoming incredibly popular. Even things like fantasy sports have been growing in popularity for years. Sports gambling is also a major source of tax revenue for states that allow it. Just like marijuana, I think that the negative stigma around sports gambling will slowly fade over the years until it becomes fairly commonplace. When that happens over the next few years, DraftKings will be in the perfect position to capitalize since they are already the nation's most popular online sportsbook. DraftKings also allows people to buy NFTs from their platform, which shows that the company is forward-thinking and can adapt quickly. Robinhood. This one was a tough choice. I know that lots of people love Robinhood, but lots of people also hate it. The main reason that people hate it is because of the way that they handled the GameStop short squeeze at the beginning of the year. The issue is still under investigation, but many people believe that Robinhood restricted their users from buying specific stocks in order to protect investment banks. Regardless of how the situation gets resolved, I think that Robinhood provides so much value to people due to the ease of use of their platform. I've tried a few different online brokerages, and there's no one that does as good a job as Robinhood in terms of making an intuitive but powerful platform for investing. I think that as time progresses, Robinhood will be able to put the negative press behind them and become one of the biggest fintech companies in the world by 2030. Now, on to the final company on this list. If you've enjoyed this list so far and found it informative, please be sure to subscribe below and hit the bell icon. This way you'll be alerted whenever I post a new video. Thank you so much for that. I do appreciate it. Now, last but not certainly least, Coinbase. Wouldn't be right to make a list like this and not include at least one cryptocurrency company. Since Coinbase is one of the only publicly traded cryptocurrency brokerages, they're the obvious choice. Coinbase allows its users to easily buy and sell different coins at the click of a button. It's incredibly straightforward. I think that cryptocurrency is honestly going to be world-changing, and we are already starting to see signs of early adoption. El Salvador was the first country to make Bitcoin their national currency, and the Federal Reserve just announced that they're not going to regulate it. I'm extremely bullish on Bitcoin and cryptocurrency in general, which means I'm bullish on Coinbase. So, I hope that you've enjoyed this video. If you found this video valuable, please be sure to follow the very first link in the video description below and subscribe to my newsletter. By subscribing, you'll receive my most valuable tips for investing, any potential stock picks that I come across, and more informative content similar to what you've just watched. Most importantly, I don't believe in sending automated emails or spamming my subscribers. Instead, you can trust that each email that I send will be filled to the brim with valuable information that's sure to make you a better investor. Thank you so much for watching. I appreciate it, and we'll see you next time.